Welcome back. Time for today's Tech Check. Deirdre Bosa joining us from San Francisco to talk a few topics in the news. Deirdre, welcome. It's good to see you. Let's begin with reports of more we shouldn't begin on such bad news, but the layoffs more so at Twitter. What are we hearing?
Yeah, it's happening. And hello, everyone. Welcome to the new Tech Check. First up, as Kelly said, those layoffs, they continue in the industry as it continues to reckon with a slowdown. Palantir also, that was out just this morning, the latest to announce that it is cutting 2% of its workforce. And over the weekend, the big story were those layoffs at Twitter. So there's more reports as well that Meta is going to do another round. So for investors, the takeaway here, it's got to be that cost cutting, guys, a focus on margins has worked for tech stocks. They were able to regain market leadership this year. But now the question is, can more cuts sustain those gains, or do investors start looking for a transition back to top line growth? Kelly and Tyler, today at least, that tech trade is working. It's coming off the worst week of the year for the NASDAQ 100, but back on track at least to start this week, midway through Monday.
Let's return to a frequent topic. Kathy Wood on our air this morning. She's been out chopping wood, stacking it, and her flagship fund up 25% this year. What's going on?
Yeah, poster child of at least the unprofitable tech trade. And there was a lot in that interview. The ARK ETF rebounded to start the year, of course. But February performance, it has fallen off along with a lot of the less profitable, more speculative tech. Here she is on NVIDIA. Have a listen.
We do own it, but for our flagship fund, where we've consolidated towards our highest conviction names, part of that has to do with valuation. NVIDIA's valuation is very high.
So even there, Kathy Wood is saying that the valuation is high, which is saying something. But interestingly, there was actually this very bullish note on NVIDIA today. Bernstein's Stacey Raskin saying that ChatGPT AI could be huge for NVIDIA. He tried to size the ChatGPT AI opportunity for the stock, estimating that executing 100 million ChatGPT queries per day would require $1 to $2 billion in annual GPU sales. That goes up to $10 to $20 billion for a billion queries a day. I was looking into this, guys. The current number of searches on Google per day, it's about 8.5 billion. So it only needs a fraction of that for the bull case for NVIDIA.
Wow. I mean, it makes sense.
A lot of chips to drive this bus.
A lot of computing power. Meanwhile, Deirdre, at Amazon, many companies still cutting costs, but they're investing in a way to try to make even faster delivery a possibility.
Yeah, so Amazon essentially here trying to balance the two major themes right now, efficiency and growth. So while sales have weakened across its major businesses, e-commerce, cloud, advertising, it's still doubling down on same-day delivery. So in doing so, guys, Amazon is essentially using its broad logistics network, which it expanded during the pandemic, to better compete with retailers like Walmart that can lean on its own thousands of physical stores to fulfill same-day orders. It, of course, comes at a tricky moment for Amazon, and CEO Andy Jassy. Shares have shed half of their value last year, but Amazon has never been one, guys, to go on the defensive. They're always at least offensive in some way, and Andy Jassy is carrying that torch.
I don't mean to put you on the spot, and I forgive you in advance for asking this question. Forgive me in advance, please, for asking this question. But do you have any idea roughly what percentage of Amazon's deliveries are handled by Amazon from origin of order to delivery at my door are handled by Amazon's trucks, its delivery people, its planes, as opposed to others?
Well, its logistics network has grown so much over the last years. I don't know the exact number of it. Yeah, but it has doubled over the pandemic, right? Andy Jassy is someone who would say that they had to lean in. They overbuilt. They have too much capacity, but that wasn't able to take advantage of this massive shift to e-commerce that we saw during the pandemic. The result is they built too much, too quickly, but he'd rather be in that position. So now they're getting back to things like same-day delivery, which is what they're trying to do here. They have this program called Fulfillment by Amazon, which a lot of their merchants use, which simplifies the process, but you give up some of the privacies and data in return. So it's up to the merchant here, but this idea of that same-day delivery, Amazon would own and operate that whole process, which can be more expensive, certainly, until you get to scale. But the hope here is that you do get to scale and you better compete with the Walmarts and the Targets of the world.
To me, it's a marvel. I ordered, to bore everyone here, I ordered on Friday night some coffee machine descaler. It arrived Saturday morning. I mean, it was all.
Do you see the option now for when you order it? It says, do you want it between 4 a.m. and 8 a.m.?
Yeah, it
overnight?
said something like that.
Yeah.
I think it did. Yeah, but I mean, and really the reason I ask is I see so many more Amazon trucks on the road and Amazon delivery people working to deliver the goods. It's amazing.
Yeah, I mean, pre-pandemic, one-day delivery was kind of off to the races. They scaled that back during the pandemic to better deliver more products to more people. But now they're getting back to that one-day delivery, of course, for that prime flywheel. It's what it's all about, guys.